Tim Conway Jr. here with Jay McBee for wheretoinvestus.com. That's wheretoinvestus.com. Let's get right into this, Jay. What are some ways that people ruin their retirement?
First and foremost is not planning for long enough. You know, retirement income is going to run out in your 80s and you live to 100 and your medical costs go up.
Right.
Another one is not realizing how much inflation can impact your income stream in retirement. And now folks are realizing they need multiple streams of income, and a classic way to diversify that is real estate. And we're going to talk about the benefits of real estate. First and foremost is cash flow that's going to surpass a lot of these other income streams.
All right, so that's why real estate makes sense right now.
First and foremost, you have safety. You have a hard asset.
Right.
So, you know, if the economy really takes a dump again, God forbid, you're going to have a hard asset that's going to generate income. And that generating income is key because there's other hard assets like commodities, like gold and what have you.
Right.
But is gold going to fund your retirement? Is it going to give you money every month? No, it won't. You know, a lot of folks learned the hard way this last go around. I mean, stockholders and even bondholders in major companies, you know, GM, you know, for instance, learned about the risk of having, quote unquote, a paper asset, which is what bonds and stocks are.
Right.
You know, they can go to zero. That's the nice thing about real estate is it's not going to go to zero. The other thing about safety is getting an undervalued asset. If you're getting something on the cheap, that's the ultimate protection. And right now, the only thing that's of value right now is real estate.
Now, what about historic gold prices?
You know, it's interesting. The last spike we saw in gold was 1979 into 1980. And you saw gold go from 200 an ounce up to all the way to 800 an ounce. In the course of 2 years, it went back down to $400 an ounce.
Now, what about stocks? The easy money has already been made.
You know, Warren Buffett, in my opinion, the brightest guy when it comes to this stuff,
right,
is saying get used to single-digit returns. Every asset class but one has recovered substantially, and the one that hasn't recovered yet is real estate. If interest rates go up, bond values go down.
Is that right?
Warren Buffett and Goldman Sachs both said, you know what? The top of the bond market is here. They got nowhere else to go but down.
The national decrease in prices, it's been unprecedented since the Depression.
The typical decrease nationally is like 2 to 3% in recession in real estate values. We're talking about a 30% drop in values nationally.
Wow.
Has never happened since the Depression. You know what I love in investments is fundamentals.
Right.
So stay away from trend investing, and one of the biggest things you can look at is value, and one of the fundamentals I look at is affordability. Can people afford their payments on housing? And right now, it's the best affordability we've had since they started tracking these figures 19 years ago. That's one of the biggest underlying fundamentals that tells you real estate's the thing now.
And interest rates in 2011, your prediction?
Everyone across the board is saying you're going to see interest rates go up. It's just a matter of how much and how fast.
Right.
So you're looking at the biggest drop in value since the Depression. You're looking at the best interest rates that we've seen in 50 years. That's probably only going to happen once in our lifetime, and it's happening right now.
You favor the single-family home. Why is that?
The values you're getting in single families, we're seeing 50, 60% discounts in single-family homes. Just incredible deals. The other thing is financing. You can tie up these interest rates for 30 years. On commercial properties, you can only tie up that interest rate for 10 years.
Why outside of the state of California?
If you buy an investment property here in Southern California area in the LA basin, you're going to be break even at best. You're not going to generate cash flow.
Right.
You're going to generate cash flow in excess of 10% on some of these markets. The values that we're getting, even in Phoenix, we're getting properties for $50 a square foot. You're going to see those homes go to $100 a square foot before you see some of the Southern California real estate go from $200 a foot to $400 a foot.
Well, here's a picture of what you can buy in Southern California for $289,000. And here's what you can purchase outside of the state of California for $78,000.
That's a better looking house. You're talking about a home that's built in 2002, sold in 2002 for $121,000 when it's brand new, and you're getting that thing for a third off. And the cash flow is dramatic. You're talking about cash flows in excess of $300 a month if you're just doing $15,000 down.
Right, and the one in Southern California looks like there might be a plumbing issue as well.
You saw post-World War II is when California just boomed. So the late, basically the 50s and the 60s was our time. And interestingly enough, our large growth stopped 2 decades ago. And over the last 2 decades, each decade we've lost 1 million of our residences in every decade. So people are basically voting with their feet. And unfortunately, business is doing the same thing. We're no longer a business-friendly state. We're high taxes. So you're not going to see the growth in California that you're going to see in some of these other markets, and it's already started.
Well, look in the news. What's happening here, Intel is building a plant in Arizona.
Yeah, and they're based here in California. Right. What's that tell you? How come Intel isn't, throwing $8 billion at expanding in California? I mean, they know something about,
Absolutely.
cost of doing business, and what they're doing is they're sinking that money into Arizona.
Now, when you and Bill go to buy a home and then rehab it, put a tenant in it, and then sell it to somebody who's actually watching right now, unemployment, or I should say employment, is a big factor for you guys.
It is very big, and that's one of the things we look for is where people want to retire to and where the jobs are.
Right.
And one of the things we've created, there are obstacles for investors that want to invest in real estate. A couple of the biggies are vacancy, getting a tenant. Are you going to take time off from work to go find a tenant?
Sure.
And doing the repairs. Are you going to deal with a contractor and deal with cost overruns and paying all the mortgage payments while you wait for that?
Right.
So what we did is created a model where we get that all done before the investor even buys the home.
Right.
All the repairs are done. That's not cash out of your pocket. And the tenant is already in there paying the rent before you even close escrow on the property.
Now, can you give us a local example? Let's say Phoenix.
We have homes there you can even get as low as $75,000.
Right.
And these are homes that are built in the 2000s. Beautiful homes. And so, I mean, we can kind of go to that example of why Phoenix versus California. This Phoenix home at $100,000, you're talking about, roughly $62, $63 per square foot.
Right.
And by the way, that is below replacement cost. So here's the question, back to that Anaheim house that was almost $300,000. Is that Anaheim house going to go to almost $600,000 before that Phoenix house is going to go to $200,000?
No.
Not a chance.
Yeah. All right, now why wheretoinvestus.com?
First and foremost, experience. We've sold over 700 properties while we've been doing this. I've had 25 years of experience. I've gone through numerous boom and bust cycles.
Right.
As a professional realtor and a professional investor. And my experience is not only in single-family homes, but apartment buildings, commercial buildings, land development, condo conversions, you name it, we've done it all. And it's that experience that's shaped our counsel and our advice for clients so they can get in and make the exact right decision right out of the gate.
You buy the house, you rehab it, you put a renter in, and then a guy comes along and purchases the home from you with instant cash flow.
That's what we try to do for the investor. We anticipate every need an investor is going to have. Even if you're a brand new investor, and we set it all up for you so it's just smooth. The financing's taken care of. We help you find the exact right property for you and hand walk you through the whole process. I mean, that's a very comforting thing for an investor that's looking at wanting to take advantage of the current marketplace.
And also putting in a qualified tenant is very important.
Oh, yeah. The stuff that you can get from our group is not only going to be repaired before you buy it. So it's going to be a foreclosure property already repaired, and we're going to put a tenant in there before you even close on the property. So you're getting cash flow from the day you close.
Let's talk about this because I'm sure everybody asks you whenever you do a seminar, what are your fees? Obviously, you don't work for free.
We don't, but what we've structured is the seller pays us at closing. We get paid a referral fee, so the buyer pays nothing. And there's a fair amount of groups out there that charge upfront fees. We are not one of them. So unless you find the exact right property for you in the exact right neighborhood, in the exact right city, you pay nothing.
You have a deal where you can actually take charge of your 401k and put some of those funds into a home.
What they're doing is they're taking their IRAs and they're moving them to self-directed IRAs, and we're getting this a lot now. Now people are buying these cash flow assets, so they know they're going to get a 10% cash-on-cash return or better, and then they're going to position themselves for this huge growth that's about to hit real estate. Atlanta is projected to lead the nation in producing 1.8 million jobs by 2025. That's a study by C.B. Richard Ellis. That's not second or third. They're supposed to lead the nation.
Wow.
And you've got 1,600 foreign-based companies there.
Now, what about all-cash investors? There's a lot of people buying cheap homes with all cash.
It's interesting because we saw this in Phoenix in the beginning of 2010. 25% of the homes selling in Phoenix were all cash. And who's buying all cash? It's the investors.
Right, absolutely.
At the end of this last year, that shot up to 40%. So right now, the investors are grabbing with both hands. They are trying to get their hands on as much as they can right now because of the pricing they have.
We're going to see real estate, I think, go through the roof in the next couple of years.
Oh, for people that buy now, and people are doing that, they're buying all cash, and when they realize, we've had investors buy, 4 or 5 homes in Phoenix all cash, and then they're just getting warmed up to the idea, so they end up financing some stuff because they realize this is that unique buying window, and the stuff that you buy now is going to set you up in 10 years. You're going to see fortunes being made by what people do right now.
All right, folks, do yourself a favor and call this number right now, 1-800-790-4240. Jay and Bill will steer you through this. They're going to get your cell phone number.
That's right.
They're going to get your office phone number.
You have one-on-one mentoring through the whole process.
Yes.
We take care of it all.
All right, and please, call them. They've sold 700 homes over their careers. 700 homes. How many homes have you sold? Probably one, maybe two, right? Get yourself into one of these homes. It is fully renovated. It's already rehabbed, and it has a tenant in there already, and you get instant cash flow. 1-800-790-4240. That's 1-800-790-4240. And get on the mailing list where every single Thursday or Friday.
Every Friday comes out with an email newsletter. Yep.
Yeah, it comes out every Friday. Get yourself that newsletter. You can see the homes that are available. WhereToInvestUS.com. That's WhereToInvestUS.com. I'd like to sit here a little longer, but I have homes to buy. Let's get out of here.